Let's start in today. My name is Emick. That's my nickname. My real name is Eric Nicholson. You can see that on the screen. I am doing this to further my communication skills, basically. And since I deal with options every day using OptionNet software, which is a great tool, I thought I would record myself and see if I can. And then I thought, well, why not share it on my YouTube channel? Let's see what happens. If I got feedback, this is going to be pretty boring, probably. And I'm a pretty boring person, talking monotone and all that. But I'll try and make it as exciting as I possibly can. And we're going to start with XLK, which the underlying, that's the stock symbol, LXK. It's an exchange traded fund. And I actually don't know what it does. It's a group of stocks, a basket of stocks in some sector. I don't know. Anyway, it doesn't matter. So here's a chart, and this is of Tuesday, January 25th, 2022. I'm backtesting this. This is something I already did, and it's currently going on. But here's the chart at the time. You can see that. And I suppose you can. The reason I got into it here is because there was a downturn, and it was hitting this point, which I figured was a support level. And then down here is where my break-even point is, which is another support level, or so I thought. Anyway, I decided to do a strangle, and this gives me my break-even points at this line and that line. So I thought that was a pretty good range. Actually, I didn't think it was the best range because it could go higher. I mean, I would like the range to be about here on the upper level. But what I did was I created a strangle and 52 days out, which was the 18th of March. So expiration date was 52 days out. And a strangle, as we know, is where you have a short put and a short call at the money, in which case 150. It's a little bit off because the price is $151 off. Anyway, so there's what it looks like in the chart. And if we, I forgot what they call this line, but that's, if it goes up the scale or down the scale, the price scale, that shows you where theoretically the little ball will end up, and that's how much you made or lost. So if we go, for instance, I can go down here and I go 17 days in advance, and this is 17 days from now. If this ball stays in the same place, doesn't move at all, theoretically it would have made like $300. In reality, that's something different, and we'll find out as we go along. Okay, let's go along. Let's go to the next day. And we're moving along. I think you can understand what's happening here. It's going up in price, getting pretty scary on the upside. Should I make an adjustment? Okay, I did. I made an adjustment on the 9th day. I stretched out. I rolled in the short call from 157, from 150 to 157. And that cost me some money. Away we go. So it's brushing with the upside. I rolled the call up even farther. Now it's going the other way on me. Kind of. I had a $119 win here. Could have got out of it, but I want to make more. If you get out of these, we're in a holiday. We're almost alive. Okay, let's bring it up to live. Today was a big hit, and I made a move. I rolled out. I'll show you what I did. Okay, what I did was the 150 put, which I had never messed with before. Ended up selling that, or buying that back, and then rolling it out to from 23 days to expiration. I rolled it out to 50 days to expiration. And the reason I did that is because I get more premium, I collect more premium, and it reduces the delta a little bit. Probably reduces the theta a little bit. So the theta is reduced from $13 to $9. That's because it's farther out. But what it does is it gives me more time and it doesn't cost me anything. In fact, I gain money from that. And since it's going down, I don't know how far it's going to go down. What's happening lately is the Ukraine incident. Russia's invaded Ukraine, parts of it anyway. So it's sketchy. The markets have been going down because of that. Also, the rate hikes that might be coming up. We're in a messy situation that I think, in general, the markets are going to go down and they're going to rebound from this once some resolution happens. I think that, although the market is so big, I don't think there can really be any manipulation by any one entity, but I think the markets are tuned in and they take opportunities like this to plunge. It's not they're in direct collusion, but they know how to play this game, and they all know, and they get certain signals. It's like playing bridge, right? Somebody bids 2 of spades or whatever, and that sends a signal. And these charts, the news, everything, it sends a signal. So it's like a flock of geese, and they're making a turn. They all turn at the same time, and that's because they're tuned in. And so they started going down, and then it went up again. I get lost in the past, but lately it's been going down. It was going up, and then now it's going down, and it's down farther than when I got into it, and I'm down $91 as of today. It took a big hit today. I think yesterday I may have had a problem. I had a profit yesterday, but today I don't. And I'm going to keep on with this and see what happens. But my thoughts on this is XLK it's well known, it's liquid, established, whatever. It's not something that's going to go away or make any major turns. And in fact, it's probably, in the long run, it's probably going to make money. And I can keep on rolling out that short put forever. And each time I roll it out, I am going to make more premium is going to come in. So it's going to accumulate in there. And unless it goes down and stays down and never comes up for air, like ever, there's no way I can't win on this. So that's today's lesson. Hope you enjoyed it. Stand by for another one sometime, maybe tomorrow. I don't know. All right.